We're making positive cash flow at the mine site. We're using that cash flow, we're deploying it into what we do really well, which is developing assets. We're hitting things like 10 meters of 3.5 grams, 20 plus meters of 3 grams. And that's great because in our models, we had that as waste and now it's all becoming ore. I think it's the best thing I've had in 20 years. And I go right back to Ocampo and I see the same opportunity for myself and the shareholders.
Hello and welcome to Crux Investor. We're here today with Brad Langille. He is the CEO of GoGold Resources. How you doing, Brad?
Good, good.
Good to see you.
Yeah.
You're here in London?
Here in London, yeah. We're doing some marketing.
Yes, but you've been bouncing around Europe as well.
Yeah, we're over at a show in Zurich, and we're going through Germany as well.
Yeah.
And yeah, it's going great. Just spreading the story.
Yeah, well, it's a great story. We're about to get into it. So give us a sense of what the sentiment is out there in the market about gold investment at the moment. Are you talking to institutions or retail?
Probably a lot of retail, especially in Germany. There seems to be a lot of retail.
Huge.
And pretty good. There's some real gold bugs there. Gold and silver bugs. I'd say the sentiment's good. When we were in August and the price of silver ran up to $19, maybe got a little ahead of itself in a very short term, and the sentiment was really, really good. But we're holding in there good. We're pretty steady right here at 60 cents.
Yeah.
Started the year at 20. So.
Yeah, well, we'll talk about that in a second. Okay, so kick off 1 minute summary for people new to the story.
So GoGold, we are Mexico focused, precious metals. We are builders of mines, buyers of mines, sellers of mines. 23 years in Mexico, we built 3 mines, did a major refurb of a 4th. Over the last 20 plus years, we raised over $800 million of equity. We've done several $100 million of debt deals. So we can finance our projects and we get them done.
And you've made people a lot of money along the way.
We have. We've done very well.
Talking of which, as you just mentioned, share price, start of the year, 20s, you're up around 60 now. You're doing something right. You must have some very happy shareholders.
Oh, we do. We have we have a lot of shareholders who have been with us for more than 20 years, who have been in our deals over all those times. I say deals, companies we built.
Yeah.
I think that's the difference in the business. A lot of people say a deal, a play, or whatever. We look at it and we build companies and businesses. That's what we aim to do. Right.
So what's happened? So we talked correctly. When was it? Back in June, wasn't it? What do you reckon, Steve? Back then, your story. You told a very good story then, but things have continued on the up as you predicted. So what have you been doing? Because you said, we're going to go out to market. We're going to talk to people. You've obviously done that. You Denver show, etc. Is that all it is, or have you been? Is there stuff going on the ground as well? How do you build a story like this up?
Lots of stuff on the ground. I think when we last talked, we had 2 drill rigs going. We have a 3rd going now, 24/7. In fact, next week we're moving up to a 4th drill rig. We have stepped out in an area on the property where there was an old mine. I believe I talked about before, that mine from 1908 to 1929.
Data. Yeah.
And then we have all that historic data that we found buried in an archive up in Missoula, Montana, which has really put us ahead years and probably.
Have you been analyzing that?
We have been analyzing that. It took us 4 months. We digitized it all. We see where the mine was, and and to understand this, it was a quartz vein, and everybody thinks quartz vein. They think a couple meters wide. This is a quartz vein that's 25 meters wide and runs for tens of kilometers. Now that mine, they mined out 2 to 6 meters of it, and they left a beautiful halo around it, where we know where the real high grade was, and where the real high grade was, the halo is relatively high grade as well. So that's what we're after. We're drilling that off to form hopefully an open pit around it, a bulk mining scenario. Also to that data, we have 22 years of monthly mill reports where we know what they recovered. They had a plus 90% recovery rate over that time period.
That's interesting. And I remember you telling us about that analysis that was to come. I mean, it's relatively inexpensive to digitize.
Yeah, it is. We have in-house, we do that. We have a group of a technical team, and they sit there and they digitize and they build what we call block models in our space, which defines the deposit. And then we can look at it and we can say, hey, every 10 holes, let's update that block model. Now, this is something that typically would be done much later in the development of asset. But as we drill this, we're guided by that old data, and we drill off that block model as we develop it. And say, hey, we need some more holes over here. We'll go over here and drill.
Essentially, we've had people talk about historic data and digitizing, and they don't really sort of necessarily have the success that you've had. It just informs the strategy, the decision making that you're going to.
Right. Well, on the block modeling and the way that we do things, in my team, I've had guys over a decade and a half who've worked as part of the team that we put together and worked with us. So even the last asset that we sold to Agnico Eagle, we bought that in 2014 in April for $9 million. We spent $11 million. And then in the bottom of the market, we sold it for $80 million US and another $12 million for a royalty that we retained and we sold later. But the point is, on that deposit, it was the same kind of thing. We had all this data that was in paper form from when this thing was mined back in the 90s. And we digitized it, and then boom, you see it. It all comes to life, and you say, wow, that's the way to look at this deposit.
Yeah.
So we're doing the same thing here.
So I think it's fascinating. I'd love to learn more about that, because I know it's a very small detail part of it, but it's just interesting when people looking in about the processes that you go through, decisions that you make, the information that you gather to be able to make those the right decision or the wrong decision.
Right.
Because bad decisions cost money. They cost time.
Right.
It's a problem. So what are the other things that you've been doing since we last spoke in terms of those building blocks that I think we talked about when we last spoke?
Well, really, it's just stepping out from where that data where we know pretty well what's there, and we're just really delineating that or grid drilling that. But now we're starting to step out further away from where they mined, which was 400 or 500 meters along a vein. So to the northwest of there, when they left in 1929, the political situation in Mexico was that it was becoming very socialist, and the unions were very strong, and a lot of the foreigners left. So when they left, they boxed up all that data and they took it with them, and nobody had it for the next 90 years. But when they were leaving, they were making a discovery to the northwest of the mine. So we've got in there and started drilling, and we're hitting. Some of our recent press releases, we're hitting things like 10 meters of 3.5 grams, 20 plus meters of 3 grams. And that's great, because in our models, we had that as waste, and now it's all becoming ore. And it's, potential ore, and it's reducing the strip ratio. So we're stepping out. So now we have continual. In our last press release, we talked about continual mineralization over 1.1 kilometers. And we're filling that in as fast as we can, so we can drive it towards putting out that 43101 public resource.
Right. That's the next big moment for you guys. And what's the timing on that?
We're looking for February, March, April.
Okay.
That we should have that out. And then we want to take that, and we have a very good database and a very good feel for costs in Mexico, and we want to take that to the first level of economic study, which is a PEA.
Well, PEA risk. When I speak to people, it has a plus or 30% variance.
That's right.
In terms of
That's
accuracy, right? But you said I've got a very good sense of costs where we operate, because there's a lot of mining around there in similar ore bodies, right? So you think you're going to have a slightly stronger sense of the economics by the sounds like.
And we built mines. That's why, and we've done lots of studies, and we know what contract mining is costs in open pit.
Yeah.
We know what milling costs.
Yeah.
We have built. We've had 3,000 ton a day CCD mills. They're big, fairly big mill.
Right.
We've had 10,000 ton a day heap leaches. We've moved 100,000 tons a day of rock, 365 days a year, with 100-ton trucks. So we know this stuff.
There's nothing that's going to surprise you, is I guess what you're saying. If anything, technology moves on, it could be.
That's right.
Less expensive.
That's right. Nothing that will surprise us. And one thing that will not surprise us, that mining's not easy. It takes guys who have done it before. It takes a strong team of technical, savvy guys. The other thing, though, innovation, yes, and especially on the metallurgical side, I have a strong team. I can't stress that enough. And that team, in our operating mine, we've really made an innovation. we've taken these old tailings, which are 300-year-old mine waste, sitting in the middle of the city, and we attacked the environmental issue, moving those out of the city, 14 kilometers away, employ the people in the city. The city's our partner. We pay them $50,000 a month. And we heap bleach that in agglomerated heap bleach. Now down in Africa, agglomerated heap bleaches are pretty common where you have what's called saprolites and clays. And but nobody that I know of has done that before with old mine tailings. So it wasn't easy. Like I said, mining's not easy. We had some issues at the start. We had a feasibility study that we went to the best firms, engineering firms in the world, but nobody's done it before. So the cutting edge became bleeding edge for a while. And but anyway, in the end, and now for the last 4 or 5 quarters, it's just been up, better and better performance, better, a new record quarter every quarter. We're making positive cash flow at the mine site. We're using that cash flow and redeploying it into what we do really well, which is developing assets.
Yeah, I mean, tailings is a fascinating space. We've interviewed a company recently. They're on AIM, a company called Jubilee Metals. And they're South African based, and they're doing very similar projects in southern Africa. So we understand a little bit more about it as a result. So you've removed a sort of liability for the town. You're extracting value from that, and you're remediating the rest of the ore by removing it from the town. I mean, how's it working there? Because you mentioned you're paying them money. How's the economics work on that?
The economics worked really well. Last quarter, with everything we paid and all our G&A and everything in the all-in sustaining costs, it was $13.64 per silver equivalent ounce. Not to mention, it builds us some good credit with a country that, rightfully so, they've moved a little more towards the environmentally friendly spectrum. So that's good with the new government in Mexico. And it's interesting you say South Africa. There's some big producers of tailings in South. DRD is one of them. And why in South Africa is it such a big business, a successful business? On our side of the Atlantic, really nobody's doing it. In Mexico, there's hundreds of millions of tons. We have the first 20 million tons that we've been working on, and we'll work on for the next 8 years. That'll feed
us. As a business in its own right. Well, it's becoming a business in its own right, because it's mining without the risk, or without as much risk, because it's all on surface.
And it's mining without as much resource risk or reserve risk. It's a metallurgical project.
Absolutely.
And that's what we spent the first 2.5, 3 years getting our head around how can we process this and get it to steady state where we are now. We've had some innovation. Some things are almost proprietary in the way we process.
Okay, so, that's fantastic, right? So you kind of cracked the technological component to this. So then it just becomes an issue if you wanted to scale up of getting contracts. You're saying there's a lot of ore sitting at the surface in South America. Is that a driver for you? Is that something that you're looking at?
Our biggest focus right now, which is going to drive the value of our stock, is Los Ricos.
For sure. And I do want to come on to that, but I do want to deal with the tailings component, because like I say, not many people have the skill sets. There are barriers to entry. There is, it's all relative, easy money to be had if you can get the contracts in place. It is almost a business in its own right, and something that you guys have got that I haven't heard from anyone else operating down in South America at the moment. So, I know it's not a focus, but you're making money.
It's a good money maker. It's becoming our cash cow that pays our G&A, that pays it's paying our exploration costs right now for that project. And I'll tell you, in Mexico, we've had meetings with the environmental department in Mexico. People at the head of their mining, federal mining department, and they came to our operation and they looked at it and they said, wow, this is what we want. There's a lot of cities in Mexico, big cities, that they grew up around mines.
Exactly.
And there it is sitting in the middle of the city. That's valuable real estate.
That's my point. That's my point, because it's not just the environmental component, which is huge, and a huge liability for the town or state, but it's also sitting on valuable land.
It is sitting on very valuable land. If you look at our map of Parral, Chihuahua, a city of 130,000 people, it's right in the middle of that city.
So in terms of the contracts, I'm wondering, you get to a point where you start negotiating different types of remuneration, right?
That's right. And if you look at DRD, for example, in South Africa, they've got into the real estate part of it too, where they say, well, we will clean up this real estate for you, municipality, but we want a share of the real estate.
Exactly. I've seen that all over Africa. It's a beautiful model. And that's why I wanted to get to where you were going and how much effort is into that. I know Los Ricos is the real big prize here, but we shouldn't ignore the tailings component.
No, and we're not throwing that away.
It's paying your G&A.
Yeah, it's paying our G&A, and it's paying our exploration cost on developing that next asset. We haven't had to finance in this company in almost 5 years.
There you go. So what I'm hearing is, as an investor, is no dilution anytime soon.
That's it. That's Beautiful. It. We have a good, strong balance sheet. We have a receivable from the Mexican government for $10 million US.
Right.
And that's in VAT tax. You know, sometimes it takes a while to work through the system, but they've always paid. Yeah. They've always paid, and we get paid on it. So we have that as well, and we're making cash.
Beautiful. So, beautiful. Like I said, I didn't want to kind of skip over that because to me it's a fascinating part of your model and part of your story. And as you say, it says no dilution anytime soon.
Right. Brilliant.
Okay, let's talk about Los Ricos. What's been happening in the last 3-4 months since I saw you?
So in the last 3 or 4 months at Los Ricos, and when I talk about Los Ricos, that's an area at the southern end, southwest or southeastern end of a trend that we have the majority of the ground on that runs for 35 kilometers. Wow. So on that portion that we're dealing with right now, which is 3.2 kilometers, as I mentioned, we're drilling off starting to step away from that main mine site now. And we keep on delineating ounces. We keep on building on what's going to be that resource model that we're going to put out there in next March or February, March or April. We're getting pretty close. Yeah. And we're going to step out there and we'll take a few riskier shots now, because we want to say, well, they knew it was there, and we're drilling off what we know they left for us, which I personally feel it has the potential of being millions of ounces and we're going to take a few of the riskier, call it not wildcat holes, but what happened over here where they were not. Maybe they didn't truly understand what was happening with the structure. Maybe it's faulted off there. So we're going to take a few shots there too.
Okay. Yeah. And which is fine for an operation of your size with your cash flow. That's fine. Having a few wild shots, as a percentage, it's insignificant. Right. It's when the juniors have got one drill and no cash and no resource.
Or you're testing one model which might be binary. You hit or you don't hit.
So you're painting your pictures, and you'll do the 43-101 sometime March, April, that sort of idea, and after that you'll continue to build out that picture of underground
in that first zone. But this is 35 kilometers of structure, and up at the other end, there's the same thing happens again. That was the Daly mine. The family Anaconda Copper was there, and funny enough, it was a U.S. ambassador at that time who was the president of that company. I don't know if you can do that today, but as an ambassador, but for 22 years. So we look at that, but up the other end of the trend, it was the McKeever family, which was an industrial family from the U.S. It had mines in Canada, U.S., and Mexico. There's looked like a similar size mine up there, which we don't know that much about, other than we have a few geos on the ground there, and they're sampling it, and they're in the old tunnels. And that might be the next one that we start drilling in the next 6 months, and building on this trend.
Okay. Okay. Same way you're assuming it's joined up the whole way.
We see tens of kilometers of that structure. Amazing. And that same structure is 35 kilometers away. It was a major trend that has yet to be developed in Mexico. It's funny, back in the first part of the last century, they were really developing that trend. And then they all left, and it kind of sat there for a long time.
It's interesting. So there's this thing where I'd love to get to in the mind of the management team here. You've got this huge trend, which you could be there for years, tens of years.
We could, yes.
But that's not the model for you. You're going to build it out to a point, at which point you'll monetize. You've got a track record of doing this. Like I say, you've made yourselves and a lot of people a lot of money doing this. So you're looking at this as a what type of investment? You're going to do this for another 5 years, or you're going to get it to a certain point? How do you make the call as to when's the moment? I guess the market's going to come to play. The conversations that you're having all the time are going to come into play. But what's going on in your head?
I think you have to be able to have options and a good toolbox that you can draw on. For example, one option. We wouldn't mind being, in baseball terms, a AAA team that feeds the major.
Right.
Why not?
Why not?
You got a big trend. You develop this part of the trend, and you're offered a good deal, and there's a distribution to our shareholders, and we just keep on doing it again in GoGold.
Yep.
Right. So as the second largest shareholder, that's an option I could like. The other thing would be that, if that's all your company, though, is that's your only business model, then you really are at the mercy of somebody else's boardroom.
Discount supply, right?
Right.
Yeah.
So we also can build a mine. So we see this as a deposit or a target where there's a real plumb at the top of it in this first area we're drilling, where it's very high grade at the top of this thing. And that's great for if we have to go and build it like we've built other deposits in the past, go to private equity, or we can take this part and we can totally de-risk it, and you just de-risk the whole project because you can borrow there and maybe you'll pay back in a very quick time and makes it easy to finance.
But this thing is huge. Like nothing you've done before. You've done big projects, but nothing this big. We're early days, we're at 120 holes. I don't
want to overstate what we're doing.
Yeah.
But we draw on our experience. I draw on 27 years of experience myself doing this. I draw on a team combined have probably 100 years experience. So, we draw on it, we look at it, and we say, the tough part here is putting this together.
Yeah.
And we know, for me, I think it's the best thing I've had in 20 years. And I go right back to Ocampo. Ocampo was my first, and we went in there with 56 holes. That's what they had. We drilled thousands of holes. We built 2 large mines. We gained a wealth of experience and a lot of wealth.
Yeah.
And we look at this, and 20 years later, almost to the day,
we
find ourselves in Los Ricos,
and
I see the same opportunity for myself and the shareholders.
Yeah, exciting. It's exciting. It's one of the stories we like. We really do like this story. I'd look at your share price at a very simple level. That's the arbiter of whether someone's doing something right or not.
For sure.
I like the fact that you ain't going to need any cash anytime soon, not unless you come up with
that's
major capital.
That's a strength in the market.
Yeah.
For us in the market, we see our peers who have, a lot of them done very good jobs, but they've all, when the window opened in August, they all went to the market because they needed money, and we didn't.
For sure.
Yeah.
Cash is king. As always, nothing changes. Brad, beautiful to have you in town. I love hearing that story. It's a great story. Stay in touch. Sounds like a few exciting things happening between now and the end of Q1.
I think it's going to be, 2020 is going to be a very exciting year for us.
Yep. I look forward to hearing all about it. Thank you,
Great.
sir. Okay.
Thank you.
Thanks very much for watching. We hope you enjoyed that. And if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.